staying on with us. Slew of results flowing in, but looking fairly dull for the markets at this point.
Oh yes, in the meantime, Moody's has also changed its JSW Steel outlook to negative, and they have affirmed the rating right now. In the meantime, let's also get to some more market views. Sampath Reddy, Chief Investment Officer at Bajaj Allianz Life Insurance, joins us on the show right now with his take on the markets. Sampath, hi, afternoon. Firstly, your view on the markets right now, given the kind of parameters that we're working with.
I think our view is generally, from the our investors are minimum investing for a period of 5 years. So at any given point of time, we have a longer term approach towards equity investing in India. So our approach towards long term, we certainly believe that equity has a good potential for the, generating very good return for the equity investors.
Sampath, what are your thoughts on the earnings so far for Q2? Are they in line with your expectations?
Actually, if you look back for the last couple of quarters, earnings have been a little bit disappointing versus market expectations. Because of that, overall, the expectations itself have got toned down significantly for the quarter two as well. So, given that backdrop, I think earnings are not, that disappointed so far. So far, earnings are not really that disappointing.
Sampath, what sectors are you favoring at the moment, and what are your recommendations for your clients in terms of investments?
I think the sectors which we like, which we have been liking for the long term has been the private banks, private sector banks. They have been very high growth sector, and also have a large exposure towards the recovery in terms of Indian economy. So that's one sector which we have been liking. In addition to that, we continue to like consumer discretionary such as automobiles and also the infrastructure side. Also, we've been selectively picking up some stocks in the in the infrastructure sector as well.
Can you shed some light on your perspective on the IT and the pharma sector? What do you think are the key drivers for the same?
The pharma has been doing well, especially the growth rates have been very good. But in the IT, the growth rates have been slowing down. The overall sector earnings growth is coming around less than 10% or so. I think in that backdrop, relatively we've been preferring pharma because of its better growth profile, and both of them have an exposure to the currency. If the rupee were to depreciate, both the sectors will benefit pretty much, I would say, equally.
Right. And how do you think the consumer durable sector plays out within the broader market sense then?
Consumer sector is also, has done very well for the last couple of years, especially earnings growth, even in the current quarter is also for the most of the companies is pretty good, especially in the back of the lower commodity prices. But in the valuations wise, most of the consumer companies are trading, upwards of 30-35 PE multiples. I would say, consumers is a little bit on the higher side of the valuation range. So at this point of time, we would say I would pretty much neutral to underweight kind of an approach there in the consumer space.
Now, there have been some concerns about the markets globally speaking. Do you think that phase is over, and what kind of advice would you give investors regarding this?
Yeah, most of the global concerns have been, I would say, has been behind, especially the US Fed rate hike, which created a lot of volatility in the month of September. I think that is pretty much behind, and even the China-related, issues have also been pretty much, I would say, in the behind. Especially in the global context, India scores pretty well because it is one of the significant beneficiaries of the commodity price falls, and overall, the India as an economy has a much better prospects relative to the most of its emerging market peers, as it is a lot more domestic oriented economy. In that backdrop, I think FIs would continue to prefer Indian market as such. I think over a long term period, you will see India will continue to attract significant amount of capital. So from that perspective, we are pretty much we like India as such.
Sampath, good chatting with you. Thanks much for taking the time out and speaking with us today. That's the view then in the markets. With that, we'll wind it up in this edition of Markets at Lunch. Up next, Riding the Bull.